Good morning. This is Simon with Trade and Perform Coaching doing the trade review for Friday, the 8th of August. And so today I'm going to talk about, so obviously everyone knows we had pretty much a straight up day on Friday, as everyone can see here. We went straight up. So I want to talk about a couple things. And I'm going to try and guide more and more of the conversation of the trade reviews towards a larger business plan. The larger business plan being consistency, making money, building a trading account, and actually doing what we're all trying to do, and some of us are accomplishing, which is making a lot of money and or slash, I guess you can call it, getting rich trading, right? Which is what everyone wants to do. We're all trying to achieve. Most of us who are coming in on the, if you're coming in on the retail side, right? Most people are trying to leave a profession they already have. Most of them pretty successful at what they already do to make a transition, which will hopefully either afford them more money or more time, right, to put their time and attention into things they would prefer to do rather than working from 9 to 5 or 9 to 7 or 9 to 9, as many of us who are very successful are still doing. So trading does afford that. You still work very hard. However, you can pick your points, and you can also choose when not to trade. And I think that's a big key there, is usually when you don't work for yourself, even if you're making a lot of money, you don't get to choose when you don't want to trade. So to build into Friday, the first thing I want to do is go back and review a couple of things. In the live market preview, which I'll edit later today and post, I stressed a couple of things. The first thing was that there had been no technical damage on NQ, that we had simply come to the bottom of the trading range. As a matter of fact, let me pause and show that really quick. So here's a volume profile chart. Here we have ES and NQ essentially side by side and with about the same time frame. I'll bring it in. And so two things I want to point out both in ES and in NQ. And the first is this. On both of these, okay, we have a, let me switch this. We have our first area from where we broke out still has not been tested in either one of these. We've gotten damn close in NQ, but we haven't quite gotten there. And we came close overnight. We came right into this, I believe it was 1890, ES was 1891, which would put us right about here. There's an open gap, okay? But the point is, the major body sitting below is this area right here, and in NQ it's this area down here. No real damage has been done, given it's been more extreme in the ES or the S&P 500 than it has in the NQ or the NASDAQ 100. So one of the things I was pointing out that in addition, we were definitely at the bottom of the at the prior end of the current trading range, right? Of this little area that we'd broken out from. We've simply traveled to the bottom end of this range. It is extremely low odds to short, okay, to short for a rollover in this area. And generally breaks like this are accompanied by gap downs, just as it was right up here, okay? These breaks don't always, right, but generally are accompanied by gap downs. So it's highly unlikely that we gap through there. So that's case number one for not getting overly bearish. The other thing that I have been hammering over and over again is that in bear markets, even super bear markets, going back to 2000, right, the NASDAQ, the snapback rallies were impressive and for shorts oppressive, right? They caused an enormous amount of damage, and they made it very, very difficult to stay short. And throughout this entire period of time, right, this whole quote downside move we've had, and if you look in here through this downside move, the majority of the closes, even if they've been down closes, have been up near the high, prior day's high. So I think it's important that we not, and I've been reiterating it, do not get bearish near the lows at all. Do not get bearish near the lows. By the same token, don't get overly bullish near the highs, but don't get bearish near the lows. So that's the second piece of evidence that went into the day. So then we got to go back to, for a second at least, go back to Thursday's chart, right? And on Thursday's chart, I had highlighted out in the market preview that this area down here, these two areas, 1890.50 to 1888.50 and 1884 to 1882, really, really, really important areas. Okay, now it would have been really nice, and that I was willing to take a loss in these two areas. It would have been really nice if we hit these during my waking hours. We didn't. We hit them during European waking hours, and I generally don't trade overnight anymore for health reasons. It was just unsustainable for me to trade around the clock. It was ineffective, right? So let's roll into now looking at what we were looking at pre-market. So from the overnight perspective and rebuilding this, we now come from, hold on one second here. There we go. We now come from exactly this, I believe 1890 was our low, 1890 and a quarter. Okay, so right into our support area to the tick. And that was great, right? It'd been really nice for us if we could have opened, say, at 1895, retested that low, and then slingshotted out. That's what I was hoping for. That's what I'm always hoping for, is to trap below and push higher, right? Instead, by the time we got to the open, we'd already come up and traded this 1914 and change just prior to the U.S. Open. Okay, we had a lot of space between this and Globex low. Now, some people might have argued, well, I'm going to take this here at 1905. Remember what's been paying this money. And so what I'm trying to do is reconstruct for people how to handle this so that you know how to. There's two things that you have to do in order to build wealth. First of all, you don't have to capture every positive trade in order to build wealth in trading. But what you do have to do is avoid areas that could possibly crunch you and set you back into the hole significantly. Okay, so if we look from the prior day, right, so going back to this, we'd actually traded into we'd actually traded in coming into the open, traded up into and above what was the prior day's white zone, right, and into the prior day's, just below the prior day's gap, right. It was a huge, huge rotation, and particularly considering the swing low from the prior day was 1900. Also, key, the 10-point rotations down, right, to the downside were so money, right, from here to here. This was over 10 points, but it was the closest zone to a 10-point rotation. Gave you 2 points. From 1914 to 1905, gave you 2 points. And then finally, at the end of the day, you had a rotation from 1913. Again, our focus is on the virgin test of a zone, right? First rotation down. This had already been tested once. Second time through. This was the virgin test with a 10-point extension through, and gave you a huge rotation back to the upside. Okay, so with all that being considered, right? If you switch gears and you said, well, I'm going to come today. First of all, we gapped up to 1914. We were unable to test Globex high at the open, right? And obviously Globex low came nowhere near the close. So the 2 points of interest at this point, right, were going to be prior day's low, at least for me, prior day's low, and still Globex high, right, which was 1913 3/4, I believe actually was, but I might be wrong on that. I'm not going to go and look because it really doesn't matter at this point. The other thing that was very important to remember is, look, these whips here, and I'm talking within 5-10 minutes, were basically we're moving from 1911 down to 1905 and back to 1911. If you recall, not too long ago, it took the entire day, just 3 weeks, just to travel this distance. Additionally, the liquidity was actually quite an issue, because when we were making some of these moves up and down, we were skipping 1 and 2 points at a shot, right? And so remember, the majority of retail traders are trying to trade with less than a 2-point stop. Okay, what that means is when you're having the whipsaws, right, come like this, where you have one bar, right? one bar go up and down 3 or 4 points, and let's say you're taking a trade right here at support, which would have been an excellent location to take a trade to the upside using prior day support, right? A 2-point stop would have just, all it would have done was tagged you out from the middle of the zone just before you got this, essentially this push higher into Globex high, okay? Very, very hard. And what I want to point out is most traders that I speak to as a trading coach want to be able to constantly adjust to the zones, to the rotation size as they change day by day by day by day, meaning somehow we should magically know that one day the 10-point rotation is the perfect rotation to take, and then the next day we should know that the 4 or 5-point rotation is the perfect rotation to trade. And I don't believe that's true. When I go through a prolonged period where it's clear that the rotation size is smaller, I adjust my rotation size to smaller rotations, but it has to be proved to me. Why? Because I don't want to dig a hole in my trading account. So I'm going to always alter and go for the 7 to 10-point rotation versus a 4 to 5-point rotation. Again, with the key, I'm not trying to master this day. I'm trying to master this year, and I don't want to dig back to a hole. I see regularly people giving back 30, 40, 50% of their profits, right? Because they're trying to capture every single day instead of trying to look at this on a week-by-week or month-by-month basis. Okay, so again, this is an eye towards running this as a business and actually remaining profitable and keeping the gains that you have. So therefore, with that in mind, and with that in mind that on the volume profile, right, on NQ, we're right at the bottom of the range. I'm not inclined out of the gate, right? I did almost nothing, which you will see when I posted it this morning. I did not take a trade in here at all in NQ, and I did not take a trade in ES. I did not call one out because I realized that in NQ we were at the bottom of the range. If NQ doesn't break down, ES won't break down. Also, I did say that if we could get a test into Thursday's low, that's where I wanted a long for a launch to the upside. I was not necessarily thinking a test back down to 1891, at least in this day session. Okay. The last piece that I want to show you is as NQ was breaking, I had pointed out that NQ has been stronger. As ES was breaking down to new lows, if we look over on NQ, we had a divergence, and you'll see that NQ at the exact same time, excuse me, I stand corrected. I was wrong. Let's actually just get rid of that. As NQ, what did I see here? Okay. I stand corrected on either one. I thought there was a divergence here, and there was not a divergence here. So scratch that. NQ had actually broken lower first, and then ES followed and quickly snapped back into the range. So I stand corrected. My point being was that I didn't want to press a short on either side until we could show that we could break below Thursday's low. So therefore, I couldn't read this, okay? And I didn't call a trade. And I promise you, a lot of people who come in and out of trades very quickly really got whipped around in this. They really got whipped around in this. This was really quite difficult, right? And then importantly, the first trade that I had set up was first move into the white zone. So if you look, I actually was off on this a bit. I called for 1913.75, and I missed it by 2 ticks, essentially. We didn't get there. And then obviously we got a very large rotation down out of the first move into the white zone. That actually somewhat breaks my own trading rules, and I've made a note of that to just take the front of the zone and not try to pinpoint these trade locations, and I would have had a very nice profitable trading day right there. The next thing that I want to point out was that this was actually first move into the zone. Okay, we're going to count this, and hopefully I'm showing with some degree of help and without a lot of hype, right? The focus is on the first time into the zone. First time into the zone. Second time into the zone generates a 2-point rotation. Third time into the zone, most of the times, up or down, you are playing with fire the gross majority of time. Okay? So what do we have here at this point in this day without knowing that this was about to come? At this point in the day, we had an inability to test prior day's low or Globex low, obviously, by virtue of inability to test prior day's low of NQ or ES. We knew that we had NQ at the bottom end of the range. And then the last thing that I've been hammering on over and over again is that counter rallies in bear markets are vicious, and in bull markets even worse, and they can be mind-blowing in their strength. Okay? And so then the last part comes down to trade planning, right? This note, weak zone, must have 1 minute tick divergence in here. And if you look on a 1 minute chart, I don't want to pull it up right now, but there was absolutely zero tick divergence into this move. What did that tell you? There's no need to take a trade in here whatsoever. Okay? Again, two things going on here. First of all, not shorting third time into the zone or even second time into the zone, right, saved you an immense amount of pain in this area. Okay? Number two, first time into this trade location, right, generates a 2-point rotation. What does that go to argue? Trade location matters. This area up here, right, all of this is a possible 50-60 retrace. It is a 50-60 retrace, and normally we would expect rejection out of a 50-60 retrace area, and that is precisely what we got. Okay, and then the last piece is there's no need to chase a move up, and I have no idea why people would be trading at the end. I guess they thought maybe 1932 was on tap, but if you were buying up here, in my view, you deserve to get your ass kicked back down to 1923. This is just foolish to buy after you've had a essentially from the low to the high at 23-point extension on ES. That is enormous, and I would never ever find a reason to chase up in this area, right? So again, even if you didn't capture any of this, even if you didn't capture any of this up move, all right, look what the trade plan potentially offered you. Offered you a potential profit point here, right? We didn't get an entry because we did not get a 10-point rotation to the downside into this support zone, right? Again, while it didn't make you money on this day, it made you a tremendous amount of money on Thursday. You got to pick your poison and live with it, right? 5-point stops in this volatility get you stopped out. 5-point rotations get you stopped out a lot in this particular environment, right? They also will occasionally deny you an entry back to the long side, as was the case here. You got a move into, we did not get the move into Thursday's low. You got a rotation in here. Several of my coaching clients actually captured this for a 2-point profit, right? As far as I know, everyone I spoke to, no one got smoked in this, and several guys captured this move up in here for a 2-point rotation back to the downside, and no one got smoked in this. Why? Because I preach again and again. There's no need to initiate a trade in the last hour of the day. The easiest part of the day is the front half of the day. So just to wrap it up, and to hopefully I'm going to take these trade reviews into a larger context, and instead of breaking down the day step by step, how do these steps play into building a trading account? Okay, you had two opportunities, right, for trades. The best opportunity came into this white zone. Personally, I blew this white zone because I broke my own rules. I moved my stop back. Let that be a lesson to everyone. Front of the zone, high odds that you're going to get a 2-point rotation lower, right? And I did not take, and I generally do not take second moves into a zone without 1 minute tick divergence. Next move into this area. So between 11 and 12, I generally do not trade between 11 and 12 Central Time. Okay, this is the third time into this zone. There was no need to be short here. This zone was marked as weak and easily broken. So this right here saved me. If you look, right, not taking a trade here, 1 stop. Not taking a trade here, 2 stops. Taking a trade here, second profitable day. So you could have easily had someone garner 4 points to the short side on this day with a properly placed trade, right? And because if you string the 2 days together, right, because a trader was patient and was waiting for the proper rotation down to get good location back to the upside, yes, they didn't get a trade on Friday. But on Thursday, they had 3 golden opportunities for 3 very beautiful trades back to the upside. And in both those days, because of the patience with the rotation size, no losses should have been racked up, right? And then you have Monday to come into, right? So imagine if you had 3 trades on Thursday, 6 points. If you had 2 trades on Friday, properly placed, 4 points. That's 10 ES points. That's 1/2 of that move that I promise you, people who actually captured that lost, most likely if they're taking 5-point rotations, lost an enormous amount of money every other day of the week to get into those trades, and they needed that one trade just to cover their losses to get them back to break even, versus the trader who stays disciplined and keeps racking up point after point, even if it's only at 2 points at a time, and as that trader moves along, continues to build trade size, becomes an incredibly powerful formula. So anyways, my name is Simon. I'm a Trade and Perform Coaching. If you need help or you're struggling as a trader, there's no reason for anyone to be losing, in my opinion, any more than 20% of their account. If you're down more than 20%, stop and paper trade. There's a lot of help out there outside from myself. You got to match personality, right, and trading style to whomever you have mentoring you or coaching you. Dr. Brett Steenbarger and Dr. Menaker, both two fantastic trading coaches, both recommend finding a mentor and or trading coach to step you through the process, because it is hard, because the rhythms do constantly change, because what works for 4 weeks all of a sudden disappears into the ether and doesn't work anymore. Don't sit there and pull your hair out, and don't sit there and blow your account up. Get the help, and most importantly, if you find yourself starting to draw down, stop, get a rhythm in paper trading, make your paper trading realistic, just as if you were trading it with real money, right? And then maintain and use a personal trading journal. The single biggest edge that you can develop is to understand the thought process that's going through your head while you're taking these trades, and while you're either making knee-jerk reactions, moving your stops, cutting your targets short, whatever the case may be. It's most of it, 90% of it is in your head and not on the charts. So anyways, my name is Simon. I'm with Trade and Perform Coaching. If you would like a 7-day trial to the live market preview, which I hold every morning at 7:45 Central Time, send me an email to tradeandperform@gmail.com. You can also hit me on Twitter or StockTwits. I hope everyone has a wonderful day, and I look forward to helping others make money come Monday morning. Talk to y'all soon.